ETF, ETF. And then why should you be interested in this asset class? More so as an investor. Well, simple. You see, ETF has a low cost fee and very diversified. Because the asset class is a combination of hundreds and thousands of shares or bond. Again, it is very simple and then economical. Because with ETF, you can access the entire market with one fund. And it is also flexible, meaning you can buy and sell ETFs just like stocks in real time. In effect, you can trade it live. Welcome to my channel. Well, I think you would like to know how the ETF works. Well, you see, this asset class or instrument, if you like, tracks a specific market, like the FTSE 100 as an example. And then because of these attributes, you could say they are similar to index fund, which also tracks market performance. By the way, check my video titled Why ETF Portfolio and another one titled Index Fund for Beginners. You'll see both videos at the end of this clip. Okay, back to the topic of the day. Perhaps you want to ask me, why should you invest in ETF as a new investor, or what do you stand to gain? Well, in that case, stay tuned. Simple. You see, ETF is very safe, and it is the best way to start if and when you are new to investing. More so if you don't have the time to evaluate a company fundamentals. I mean, things like financial statement, income statement, growth, etc., to determine the intrinsic value of a stock. I mean, the company behind the stock. However, I'd like to tell you, rather, you should be aware that there are thousands of ETFs ranging from small cap, medium cap companies. Besides, we also have ETFs in different sectors, like the bond ETF, corporate ETFs, emerging market ETFs, etc., etc. You see, these numbers, no doubt, could be very overwhelming. And that is why in this episode, I will examine quite a few, most reliable, growth and valuable ETFs. And then in doing so, I will take a look at some key basic metrics like expense ratio, dividend yields, portfolio holdings, performance, and then returns. Well, let me start by looking at the first on my list, which is the Vanguard Total Stock Market Index Fund ETF shares with a ticker symbol VTI. Okay, let me take you to Charles Schwab's website and have a look at this ETF. Well, as you can see, let's take a look at the fund strategy within this ETF. The fund tracks the performance of the total US market index and includes large, mid, small, and micro cap stocks, which are regularly traded on the New York Stock Exchange and then NASDAQ. It invests by sampling the index, meaning that it holds a broadly diversified collection of securities. Okay, let's look at the holdings. What have we got inside these ETFs? Let's have a look at it quickly. All right, here we are. What have we got here? We have the likes of Facebook, Amazon, Apple, Johnson & Johnson, Visa Class A. And then let's look at some of them with some of the large holdings here. we have the likes of Apple, Microsoft, and Amazon. Apple sitting at 5.16%, Microsoft at 4.72%. Well, you see, as you can see, this is a combination of giant, large, mid, and small companies. And most of these companies, if not all, are growth companies. Again, let us look at another metric, which is the performance of this ETF, if you like. Let's have a look at the performance. And then I will explain the cumulative growth projection for you. Let's have a look at this. All right, what have we got here? Well, as you can see, we have okay, let's say you invest 10,000 in 2015 and 2016. Then by 2020 you would have realized 17,500 despite the crash. This is a cumulative growth of a 10,000 investment. Now let's have a look at the bar chart. Through the lens of this bar chart, let's see the performance. What have we got here? Well, in 6 months, you see this fund has yielded plus 15.8%, which is not bad at all. And then have a look at this 5 and 10 years as well. Let's quickly have a look at the dividend yield of this fund, if you like. Let's have a look. And then dividend yield is one of the good metric you should look for when you are buying ETFs. Now let's quickly scroll down and have a look. Well, what do we have here? We have a dividend yield at 1.85, and then these are other metrics to consider. Now let's quickly have a look at the asset of this particular fund, ETF. What do we have here? We have a total asset sitting at 921.4 billion, 921.4 billion, and the annual turnover of 4%. Okay, now let us look at one of the very reliable metrics, the expense ratio. Why? Because you see, you don't want to invest and at the end of the day commission takes all your money, so you want to look for a lower expense ratio. So in this case, what is the expense ratio? What do we have here? We have the expense ratio at 0.03%. What does it mean? Well, let me explain. It means for every 500 you invested, Vanguard would collect 15 cents per year. This is a very good deal. It doesn't get better than that. Okay, now let's say you don't have this amount, $188 to invest, yet you want to buy this ETF. Well, you are in a safe hand with Charles Schwab's. You see, Charles Schwab has created a very similar ETF, which is called the Charles Schwab's Broad Market ETF, ticker symbol SCHB. Well, let's have a look for the avoidance of doubt. Let's click on this and let's look at the holdings. Let's see if it is similar to the first one. Now let's look at the holdings. What have we got here? Let's click the holdings. Now here we go. What have we got here? We have a look at the holdings. Very similar. We have Apple, Microsoft, Amazon, Facebook, and all this. You see, people often ask me, why do I always prefer Charles Schwab's? Well, it's simple. The platform is user friendly, easy to navigate, and it's a reliable brokerage. Your money is safe, and the website doesn't crash. So far, for so many years, it has not crashed, unlike some. Well, if in the course of this video the website is taking time to load, it has nothing to do with Charles Schwab's platform. Well, it has to do with my service provider here in the UK. Okay, good news. You can now open Charles Schwab's account even if you are in Africa or Asia. Check my video titled how to open TD Ameritrade and Charles Schwab's international account for Africans and Asia. You will see the clip at the end of this video. And then, this is very important. I like to emphasize this. I'm not financially incentivized by Charles Schwab management to say all this. This is my opinion. Okay? Now, back to the topic of the day. Now, the next on my list is the Vanguard Real Estate Index Fund ETFs with the ticker symbol VNQ. Now, let's have a look. These ETFs comprises of commercial, residential, and real estate trust. Let's have a look. And then you probably want to ask me the relevance of these ETFs. Well, I will break it down. Stay with me. Well, you see, this is REIT, as you can see, and then you can use REIT to hedge your portfolio, mitigate risk, and for diversification. And to let you know, according to government regulations, REIT is required to pass 90% of profits as dividends. Hence, REIT is a source of consistent income. So let us look at the fund strategy. Well, what do we have here? You see, this ETF tracks the performance of the MSCI US investable market real estate, say 25 to 50 index, that measures the performance of publicly traded equity REITs. And the price as of today is, let's have a look. We have it at $84 thereabout. Meanwhile, let me quickly say this. I like to say that REIT, this ETF REIT has been hammered because of the ongoing development, the virus. Well, in my opinion, it will soon be over and the rate will bounce back. Essentially, this ETF is it's good for long term. You should be thinking about the dividend accumulation. Let's quickly have a look at the holdings of this ETF. What do we have inside this ETF? Well, as you can see, let it load up. What do we have here? We have American Tower, Crown Castle, Public Storage, Well Tower, Reality Income. And then you see the American Tower thereabout, and this ETF consists of REITs like factory outlet, health, hotel, industry, mortgage, etc., etc. And then let's look at the performance of these ETFs. Here we go. Well, as expected, you should not be surprised because of the so-called virus. This is expected. And looking at the cumulative growth of a 10,000 investment in 2015 or 2016 till date, you see that there is not really, the graph indicates a major crash. Of course, that is what is expected because of the virus. That's a significant drop. Well, in my opinion, is it going to bounce back? Yes. Now, let's quickly have a look at the dividend yield of this fund, if you like. Let's quickly have a look. Why? Because it is important to consider these metrics. It's very, very important. Let's quickly scroll down and have a look. What do we have here? Voila, we have the dividend yield at 4.15%. And then look at the long-term earnings and then historical earnings. They are both great. Fine. Let's quickly look at the total asset of this fund, if you like. Well, the total asset is 53.9 billion. 53.9 billion. Annual turnover at 6%. Well, I say not bad. This is very impressive. Again, let's look at this key metric, which is the expense ratio. I say you need to look at expense ratio. You don't want commission to take all your money. Now, let's quickly have a look at this. What do we have here? The expense ratio here for this particular fund is 0.12%. This is very low. It doesn't get cheaper than that. Okay, now here is the bonus. For still staying with me till now, download the step-by-step guide on how to pick value stocks. It is a PDF file. Check the comment and description section. And yes, it is free. At no cost and no catch at all. Okay, let us look at the Vanguard S&P 500 with the ticker symbol VOO, which is the next on my list. Let's have a look. VOO. And to let you know, this is a very popular ETF, more so because it tracks and invests in the top 500 US company in the US. And then let's quickly look at the holdings. What have you got here? Let's quickly have a look at the holdings. Now, well, we have the likes of, let's have a look. Johnson & Johnson, Apple, Amazon, Microsoft. And the large holdings we have here is Apple sitting at 6.46%, Microsoft at 5.65%, and the Amazon at 4.77%. Well, we do have some of the FANG companies in this fund, and you see what we have here. We have lots of potential, and this fund is a growth. This ETF is a growth stocks. Well, and it has great potential, and then given the past and the present data, it has given good returns. Well, you could say it has some element of risk embedded in it. Let's quickly look at the performance of this ETF. Well, let's have a look quickly. What do we have here? From what we've seen here, let's quickly look at the cumulative growth of 10,000 investment in 2015, 2016 to 2020. Despite the crash, what do we have here? We have 17,500. This is very impressive. Now, let's quickly look at let's look at through the lens of the bar chart. What do we have here? We have plus 13.20% returns in 6 months. Very impressive. Then have a look at the 3-5 years growth as well. Okay, now let's quickly go to the dividend yield. What have we got here? Let's see the dividend yield. And then, because it's important, like I said, you need to know what is it going to give you. The yield. Now let's quickly scroll down. What have we got here? Let's have it down. We have the dividend yield at 1.95%. Okay, now quickly let's have a look at the let's look at the price to book and price to book earnings. Not bad, quite impressive. Okay, let's look at the total asset. What do we have here? We have total asset at 557.0 billion dollars. Annual turnover at 4%. Very impressive. And then let's quickly take a look at the expense ratio of this fund. Yeah, let's quickly have a look. You know why I always say take a look at the expense ratio? It's very important. The expense ratio, let's have a look, 0.03%. Very, very low. You see, you have nothing to lose. Again, we have the equivalent of this fund, which is the Charles Schwab's broad market ETF. It doesn't get better than that. Now, let's look at the Vanguard S&P 500 Growth Index Fund ETF shares with the ticker symbol VOOG. Let's quickly have a look at that. VOOG. Okay, here we go. Let's have a look. What do we have here? This particularly index, I would say, it tracks the performance of S&P 500 growth, as you can see it here, which represents the growth companies as determined by the index sponsor of the S&P 500 index in the United States. Well, now, in summary, let me quickly say this. This ETF consists of growth stock, and again, you could argue that this is more riskier. Well, it comes with great high reward as well. And then let's look at the holdings of this particular ETFs. What have we got here? Let's quickly have a look. What do we have here? Okay. Now, what do we have here? Let's have a look. We have the likes of Microsoft, Apple, Facebook, Nvidia, Visa, and then performance very impressive. Large holdings being Apple 10.60%, Microsoft at 9.28%. And then if we try to look at the performance, let's see what has it done so far. Let's look at the performance of this ETF and then see if it's the right ETF for us. Let's have a look. Okay, what do we have here? Valor, very impressive. Look at the cumulative growth of a 10,000 investment in 2015 and 2016. What do we have here? Well, you would have realized $20,000 by 2020, even though with the crash. What do we have? Let's look at the 6 months performance of this fund ETF, if you like. It's at plus 19.0%. Okay, let's quickly look at 3 years, 5 years. You can see very good. Now, what do we do next? Let's look at the dividend of this particular holdings. Let's quickly scroll down and have a look and see if it's the best ETF for us. Let's quickly scroll down. What do we have here? Here we are. What do we have here? We have the Valor. The dividend yield is at 1.16%. Not bad. Now let's quickly have a look at the what's it called? The total asset is sitting at 4.2 billion, and total annual turnover at 24%. This is really good. I'm impressed. It doesn't get better than this. Well, as mentioned, this is a easy route for both new and experienced investors. And according to report, ETF is not only long-term strategy, but it gives you peace of mind as you watch your investment grows over the years. It doesn't get better than this. Okay, here comes the best part. Subscribe, like, and comment. Remember, the goal is to generate wealth, build companies, and create jobs. Bye now. See you soon.